One of my small cap companies in my portfolio reported earnings today, and the stock absolutely fell off a cliff. And I mean, seriously fell off a cliff, down more than 25% inside of trading today. Its value got cut by a quarter. And honestly, it's really only like 2 or 3 things inside the earnings report that really made the stock fall off a cliff. Believe it or not, even though the stock is down more than 25% in a single day, there actually are some good things inside this report. That might be hard to believe, but we will take a deep dive and I'll tell you what my updated plan is with this stock. By the way, the stock is The Honest Company, and that's ticker HNST. So let's check out the exact drawdown. Exact drawdown during the day was down 29.39%. That means over the past 5 days, the stock is now down 31.37%. Over the past month, down 41%, and over the past 6 months, the stock is down 53%. 6 months ago, I was up very, very nicely on the stock. Now, actually, after this earnings day, after this terrible drawdown, 28%, I'm actually down on this position. This is one of the 2 positions I'm down on. It's this one, The Honest Company, and the second one, the Trade Desk. I'm going to post a video on the Trade Desk sometime soon. It might already be up. A dog just ran straight into my tripod, so hopefully this camera angle is not all messed up. But anyway, show goes on. As I was saying, after this drawdown for Honest, this is one of the 2 stocks that's down in my portfolio. It's this one, The Honest Company, and then the Trade Desk. That's also down in my portfolio. I made a video on the Trade Desk. I'm not sure if I'm going to be able to post it before this video or after. It might already be up, so keep your eyes peeled for that one. By the way, if you're not subscribed to the channel already, go ahead and click that subscribe button. We're getting really, really close to hitting 10,000 subscribers on the channel. If you can help us reach that goal, that would mean a ton. All right, back to the video. So let's jump into some of the numbers. They had revenue of $93 million, which this is the first thing that's bad. So that revenue number of $93 million, not only was it a miss from what analysts were expecting, and not a small miss, a 7% miss. That is a huge miss in terms of revenue for such a small revenue, small cap company as they are already. And it was a decline year over year of 6.7% from 99.5 million down to that 92.57 million that they just reported. On the good side of things, there are quite a few good things inside this report. There are some really bad, like we just saw, but EPS was a beat. GAAP EPS estimates from analysts was for -1 cent, but The Honest Company actually was GAAP profitable for the 3rd quarter in a row, and they had GAAP profitability of 1 cent per share. So that's a 2-cent beat from what analysts were expecting. Also, adjusted EBITDA was a major beat. They reported $3.52 million of adjusted EBITDA versus the analyst estimates of $1.74 million, and that's a 3.8% EBITDA margin. That said, even though it was a beat, that's still down big time year over year. Adjusted EBITDA in the year ago period was $7.07 million, and now they just reported almost half of that, $3.5 million, which means we had a 330 basis point contraction in terms of adjusted EBITDA margin from 7.1% down to 3.8%. But on the net income side, there was actually a margin expansion. Their margin went up by 4x in terms of net income margin. It was 0.2% in the year ago period, 0.8% in the quarter they just reported. That's a 60 basis point increase from the year ago period. The main way they were able to have that net income increase year over year, even though revenues dropped by nearly 7% year over year, was due to their cost saving efforts. In the year ago period, they had operating expenses of $38.339 million. In the quarter they just reported, significantly down to $34.176 million in terms of operating expenses. So like I said, this quarter is not all bad. There's definitely some bad things in here and some worrisome things in here, but it's not as bad as you might think when you saw that 29% drop in a single day in terms of the share price. Of course, the revenue miss they had inside of Q3 is definitely weighing on the stock, but also weak guidance for Q4 in terms of revenue and adjusted EBITDA is really, really piling on in terms of that negative pressure, that selling pressure on the stock. Last thing I want to hit before we talk about the CEO plan and before we talk about my updated plan with Honest, I want to talk about the balance sheet. For a small cap company, this is an extremely strong balance sheet. They have $71 million of cash and cash equivalents, with zero debt whatsoever all on the books. So that is a very, very strong balance sheet. If you look at this company 2 years ago, the balance sheet was in a very bad spot. Now, Carla Vernon, the CEO, has been able to turn that around in a very short number of quarters to where they have no debt on the books and 71 million of cash and cash equivalents with about a $300 million market cap after this move today. So very impressive balance sheet. Now, before we get into my specific plan with Honest, let's hear what the CEO had to say. She said, while the third quarter revenue was softer than anticipated, our team's disciplined execution delivered profitability improvement, resulting in positive net income. In response to a challenging macroeconomic environment, our teams are acting decisively to strengthen performance across our portfolio. Our strategy remains focused on building a stronger and more scaled Honest brand, advancing operational efficiency, and strengthening financial profitability. Today, we are announcing the launch of Transformation 2.0, Powering Honest Growth, a comprehensive two-part program that drives greater focus on our most strategic and profitable categories by exiting certain lower margin, non-strategic categories and channels while also optimizing our cost structure. We believe these actions will reduce complexity, drive sharper focus on our core product categories, and strengthen our profitability. Through these actions, along with continued execution by our team and the enduring strength of the Honest brand, I remain confident in our ability to deliver beloved consumer products to our community and create long-term value for shareholders. Well, there's not much long-term value for shareholders being made in the last 6 months or year to date. It's been down, okay? But anyway, now she said in her statement that they're exiting certain lower margin categories. Let's check out what those categories are. It says here, the non-strategic categories and channels, including exiting Honest.com fulfillment and apparel, as well as exiting retail and online stores in Canada, optimizing the company's cost structure by right-sizing selling, general and administrative expenses, and implementing supply chain efficiencies, all right? This is probably one of the things that made the stock drop the most. The revenue for product categories or channels we are exiting accounted for 22% and 21% respectively of the revenue for the last 3 and 9 months. That means if they just take those out right away in the snap of a fingers, their revenue would have been down 22% in this quarter right here and 21% year to date. Since the beginning, since January 1st to now, it would have been down 21%. So them exiting those categories is going to bring the revenue down. This does not spell a good story for revenue growth moving forward. It's probably going to be revenue decline for multiple quarters in a row. It's going to be some rough comps. It's going to look like 7% down, 10% down, 12% down in terms of revenue, unless they can really, truly get the Honest core products to sell way more. But in order to make that happen, there would probably need to be big time marketing spend, which it sounds like they don't want to do that at all. They want to focus on profitability, which I like, but when you've got revenue dropping like crazy, you've got to think of a way to get that revenue growth to either stabilize out to be like in the low single digits or at least flat, right? We don't need crazy revenue growth from every single company in the entire stock market, but if we're going to have revenue dropping for a full year as they exit these businesses, that is going to be very rough for everything in the underlying fundamentals. If you immediately take 22% of a company's revenue away, even if you're taking away those lower margin channels and those lower margin categories, the odds that that doesn't have an impact on their bottom line is extremely slim. We'll see what happens with revenue growth moving forward, but they've got a whole lot to prove with this Transformation 2.0 initiative they've got going on. And obviously right now, based on this 29+% drop, the market is not buying it as of today. So what's my plan with Honest now that I'm down on my shares? Am I going to be picking up more shares? Not right now, okay? I am going to be in a wait and see period until I'm going to wait until the first half of 2026 happens. So that means I'm going to get probably 2 to 3 more quarters to see if this Transformation 2.0 can really make a big difference. I'm basically putting Honest on a chopping block in my portfolio. I'm not chopping away yet. I'm not selling shares yet. I'm not exiting my position yet, but they've got about 2 to 3 quarters to win me back and prove to me that they deserve my money to be invested in their stock. I'm going to need to see major progress towards this Transformation 2.0 initiative and see if they can really make it happen. The last time they had one of these transformation initiatives, it did great things for the company. It increased margins like crazy. We saw 10+% gross margin expansions in a 1-year span whenever they're doing this Transformation Initiative 1.0. So I do have a belief in the management team that they can make it happen. It seems a lot more difficult this time since their revenue growth rates are going to take such a haircut, and we're probably going to see revenue decline for multiple quarters in a row. So we'll have to see if they can make it work. Another thing I need to see is a way more active investor relations page. Pretty much all we ever get on the investor relations page in terms of news is every 3 months we get earnings. That's about it. They need to update shareholders and keep them excited about holding the stock. Get them excited about what's to come over the next few months. Even if it's really boring stuff overall, it's better to have some kind of news that you can share with shareholders rather than just have them wait 3 months before they get earnings. And then the next thing they see is another earnings report. And then the next thing they see is another earnings report. We need to get them excited about the underlying business with Honest. So to sum it up, my plan with Honest, I'm going to give them about 7 to 9 more months to prove to me that they deserve my money. They are on the chopping block right now. If I feel like things are trending in a positive direction for Honest as these next few quarters go on, I'll reconsider. I might hold on to my shares, but I might end up selling around the midpoint of 2026. We'll have to see as these quarters roll on. I want to hear in the comments below if you hold shares of the Honest company, and if you do, were you one of the many people selling your Honest shares today, or are you holding on for a little bit longer, or are you someone who believes in the management team's vision and you think they can make it happen over the long term? I'd like to hear what you have to say about Honest in the comment section below. Definitely a nasty, nasty day, and it looks like they've got a whole lot of work to do to prove their worth to investors over the next few quarters. This is a good reminder, it doesn't always go as planned with stocks. It's not always sunshine and rainbows when investing in the stock market. All stocks are inherently risky, okay? Even if the business model looks like it's doing great and it's trending in a positive direction, on the snap of a fingers, you can have a stock drop like we just saw by 29%. I saw another stock, Elf Beauty, drop by more than 30% just today. We saw Pltr over the last 3 days drop by more than 15%. These moves can be massive and they can happen very, very quickly to the upside and to the downside. Just make sure that you're level-headed enough to handle it. I did not panic sell into the drop today. I'm going to give them a few more quarters to figure it out. Looking forward to seeing your comments in the comment section below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. So let me know what you think in the comments below. Do you think Honest is a terrible stock and you don't want to touch it at all? Or do you think it's an opportunity at these lower levels? I want to hear about it. Thank you so much for stopping by. Have a great night.